Hello, everybody. I'm just sending it to WhatsApp. My dear folks on WhatsApp. Just 1 second. WhatsApp 32nd episode. Got it. Done. Sent it on WhatsApp. Live on LinkedIn. Live on YouTube. Sorted. Let's get the comments rolling. There is one comment. Audio is good. Oh, thank God. Thank you, Mr. Kulkarni. Thank you so much. Yesterday, we had a big technical difficulty where I spoke for 5 minutes and it turned out that I wasn't audible on LinkedIn. It was a huge problem. But thankfully, now that you've mentioned LinkedIn, I'll just check YouTube. All good on YouTube, says Mr. Kumar. Thank you so much, Kumar. Thank you, Mr. Kumar. So we will begin, right? LinkedIn and YouTube set. So without wasting any time, let's go. Boom, boom, boom. Bum, 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 bum. Bum, 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 bum. Bum, bum. Bum, bum, bum. Bum, 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 bum. Hello, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Things just got a whole lot better, ladies and gentlemen. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we've got to follow a tradition, right? You know the tradition that we have to follow. Tradition. The tradition of the simultaneous sip. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice or stein, a canteen jug or flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having water with black pepper in it. No elaichi today. It's good for me. So let's go. Oh my God, beautiful. Let's do it again. Wow. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we are in this together. And that's such a nice thing to say. Let's go. After rare earth magnets, China has planted agri barriers on India. So there's a lot of supply of fertilizers which India gets from China. 90% of Indian fertilizers apparently come from China. And they have been blocked. So China is in the full mood to actually, screw with whatever India is doing. India typically imports 1.5 to 1.6 lakh tons of specialty fertilizers. China has been the person who's representing the Soluble Fertilizer Industry Association says China has been restricting suppliers of specialty fertilizers for last 4 to 5 years. However, this time it is a complete halt. So they say that almost all of it comes from China, and without that, it's gonna be a bit of a problem. So, and the local India imports 80% of its supplies from China, not 90 but 80%. And they say the local production of these specialty fertilizers is not viable. So one might think what's happening with China, right? What's going on with China? The rare earth mineral situation was obviously very tough. Is still tough, by the way. It's still torn up the auto and electronic industry's rear. But now comes agri. So, and people don't realize how dependent we have become on China. Mr. Nitin Kamath wrote a post yesterday, which was a very nice post, which was very collinear to what we keep discussing as far as dependence on China is considered. That are we making, when we are shifting the diesel cars, or let's say petrol cars, when we are replacing them with EVs, are we leading to cleaner cities but worse biodiversity units? Because Congo, which makes uh, cobalt or lithium or all of these mines, they are in very bad shape, and they used to be biodiversity hotspots, and now they're done. And and it's just very few hands that are gaining all the so with oil, uh, you had blocks, and you had different energies, like solar has a different energy play. But when it comes to China, we are looking at serious dependencies and problems as far as now agri barrier is considered. Anyway, moving forward, India and UK FTA to include co-equal origin provision. So co-equal origin provision is essentially, you remember we discussed when China got tariffs, and countries started realizing that China's trade might could be a problem. What China essentially did was set up Vietnam as its second unit. So they just used to send their stuff to Vietnam and then reassemble it, repackage it, and then send it. So the country of origin was essentially China, but it was going through. So India has asked that the trade imports that we are doing, we need co-equal origin provision. That we cannot be having, because we are exempting each other of duties, of many duties. We need to make sure that the origin norms apply. Yeah, that makes sense. That makes sense. Looking at things that make sense, companies, this is the bullshit of all bullshit insights. Apparently, a report has come out which says companies look for leaders who thrive under pressure. So, this is apparently like a proper article which says company or look for leaders who thrive under pressure. As corporate India grapples with unprecedented volatility, the ask from organizations while hiring leaders is becoming more layered and demanding than ever. Companies now, it gets better, it just keeps getting better. It says companies now want leaders who don't flinch when markets crash, crude prices rise, or geopolitical tensions expose supply chain vulnerabilities. They don't, now want leaders that don't flinch. Earlier, they wanted leaders who flinched, but now, in 2025, Thursday, 26 June, companies now are looking forward to leaders who don't flinch. Because now more than ever, the geopolitical. Why do people write this kind of stuff? It's like saying something without saying anything, right? God. Anyway, more Android phones sail to foreign shores via India. So viewers of Thinkers Frequency would remember that India's smartphone market is stagnant, and it's almost at a decline. It is at a decline actually. 151 segments, 152 million shipments, 150. So it's static, and even month on month, 12 million shipments of smartphones. So it's static. So what a lot of Indian Chinese companies and manufacturing units have done is that they've actually started exporting phones from their Indian units. It's not just to counter the slowdown in the home market, it's also a new strategy because, again, China's exports, the telephone exports, mobile exports are looking at tariffs, right? And they don't want their tariffs to get beaten up. So, what they're doing is again using India as a, let's say, an up value point, a node where things get value added. So they send a few components, most of the components. We get a few components here, we assemble the phone and we send to US. So if you look at it, there's a 55% US tariff on China and 26% levied on India. So that differential is making companies look at India as their supplying base. So Korean major Samsung that exports smartphones from the US shipped almost a million shipments in January to May period compared with 6.5 lakhs during previous 12 months. So the US levies a 46% on Vietnam, the Samsung's main export center. So you realize just how I told you that US now realized that Vietnam was essentially a proxy for China as far as the export scene was considered. So US said you are also getting tariffed. So 46% on China, Vietnam, but 26% on India. So India is in a slightly better position and a luckier position as far as the entire scene is considered, right? Mr. Tushar Tiwari says, "Ha! Was it a joke? Oh, that was the joke. You were laughing. I'm sorry, I saw your comment a bit late, but yeah. So it was a good one, right? Companies looking at leaders who thrive under pressure. Well, nice. Good change for companies, right? Anyway, speaking of another cliched stuff which RBI has said, now RBI has said, India resilient, but barriers to trade a risk. Wow, so insightful. So insightful. India is resilient, but barriers to trade a risk. Sure. So BRICS has condemned military strikes on Iran, but it hasn't named Israel or China or US. So BRICS is, what is BRICS? BRICS is Russia, India, China, Singapore, and Brazil. Yeah, that's BRICS. So they had a mandatory, like a customary statement against the attack because they had categorically warned. You remember, Russia and China bloc categorically warned US to not get involved in the conflict. Probably this was their categorical warning. They were supposed to condemn. उन्होंने कड़ी निंदा करी. Anyway, moving forward, there's a lot of political chit chat which is happening which I'm not interested in sharing because a lot of it is just inconsequential to the world of business and finance. And why would we discuss it, right? Anyway, moving forward, rising cost and slump push digi lenders to slow lane. So digital lenders, the lending startups that saw a lot of growth, they are seeing some slowdown. As we already discussed, the BNPL sector is just absolutely washed away. But even the unsecured lending and lending in general through startups and NBFCs saw a decline because there were a lot of provisioning errors. Recovery was an issue, and then banks and then RBI really cracked down on it. And in my opinion, it actually dealt with it quite early. This could have snowballed into a big problem. Just imagine a lot of unsecured loans going to people and bottom of the pyramid suddenly getting access to instant loans, unsecured loans. You remember the cell? Get a loan processed in a minute or something, and all of those loans getting processed and then getting defaulted. And then when loans get default, somebody has to pay, right? So though all those problems were compounding, and lending companies saw higher operating expenses as credit quality worsened and regulatory tightening forced businesses to show disposals and grow more cautiously. Well, no surprise there. We've been discussing this a lot. So there are a few companies in this domain, Credit B, and a lot of them are going public. So a lot of them are actually thinking, what do we do? Because when they go public, there's already a lot of scrutiny as far as valuations are considered and public market valuations and private market valuations. I wrote about it recently. And since the change in sentiment on the entire sector, what do they look at? So that is a good question to ask. A fair question, a reasonable question. So Credit B reported a muted net profit growth of just 10% when its revenue grew 50-60%. So the company's revenue grew 56%, but its profit could only grow 10%. And Credit B's rival Moneyview reported an improvement in the returns while it slowed down dispersals in loans. So a lot of these people are also going the AUM route where they're managing money. So that business is okay, but the lending business is actually looking at a particular slowdown, which is not surprising to anybody. No, not to anybody here. Uh, Archit says, "Good morning, sir." Good morning, Archit. Good morning. Have a beautiful day. Uh, Karnataka's AAR moves to reverse Namayatri based GST ruling. So, viewers of Thinkers Frequency would remember just yesterday or day before, a few days ago, we discussed how cab aggregation companies selling subscriptions were asking for a level playing field. So, these people were saying that companies like Namayatri, who use an ONDC platform, or Min, they don't have to pay GST on their subscriptions to auto drivers or whoever, but we have to, which is not fair. To which Karnataka has actually reversed Namayatri's GST exemption. AAR, the statutory body that provides clarity on applicability of GST, ruled on September 15th that Nambayatri was not liable to connect GST. Alright? Because it follows the GST, it follows subscription selling and so on and so forth. However, the platform collects in this. In its latest ruling, notice dated June 19, AAR said it gathered from Moving Tech application that company acquired Namayatri as a going concern. The authority said it could declare September 23 ruling void because JustPay had obtained it by suppressing and misrepresenting material information. So AAR says that JustPay, the company which owns Namayatri or has just spun it off, so JustPay used to own Namayatri but not any longer. It suppressed a lot of critical information while acquiring this particular GST exemption, and now it's gonna get. So there are two ways to get a level playing field, right? One is to get a better outcome for you, or one is to get the worst outcome for the other party. That's always the way to get a level playing field, right? So how can Kirana stores get a level playing field against, let's say, quick commerce? Well, they could have their own quick commerce, right? And it could receive a lot of funding. So all Kirana stores could form an association and then start their own their own heavily funded quick commerce venture. Or what they could ask for is like price parity as far as these quick commerce platforms concerned. So there are two ways to get a level playing field. One is to get a better lift for you, or other is to create a crater for somebody else. That's how the business works. AI becoming part of large deal closure cycles longer. Chirag Patil says, hi. Mr. Chirag Patil says, hi, sorry for the silly question, but why credit lending is going down? What needs to change? I'm unable to understand what is the fundamental issue with Indian space, and it's a bad sector. So it's not that credit lending is going down, Mr. Patil. It's actually unsecured lending and lending through NBFCs, which had lax regulatory norms. That is going down. So what these people started doing was, when these startups entered the space, they began lending very recklessly. So they started giving instant loans. Instant loans was actually a thing just a few years ago. It's not been a long time. And when these people gave those loans, a lot of those loans defaulted. And when those loans defaulted, RBI woke up and said that this could be a big problem. This could be a real big problem, which led to tightening of these norms, which led to problems with NBFC lending, because RBI has tightened the grip. Mr. Tushar Tiwari says, read your Zepto blog. It was spot on how VCs are ignoring all these facts. Thank you, Mr. Tiwari. Very nice of you. Anyway, moving forward, AI becoming part of large deals, closure cycles longer, says Lambu. Mr. Lambu is apparently the chief of LTI Mindtree. LTI is Larsen and Tubro, Infotech, and Mindtree. So Mindtree was an independent company which got a hostile takeover from L&T, because L&T also ran an IT company and Mindtree was a very nice IT company. They had crossed $1 billion in revenue and stuff. And then they got a hostile takeover from L&T, which they couldn't fight. This is a very interesting story. So L&T's major stakeholder, about 26%, was Mr. VG Siddharth, who was the founder of Cafe Coffee Day, a legendary entrepreneur. He was the first investor and a major stakeholder of Mindtree. But his cafe coffee day venture was under serious debt, and that debt wasn't being able to get paid back. So what happened was, Mr. VG Siddharth, rest in peace, was forced to liquidate his L&T stock to actually pay for CCT's debt. And that transaction also was blocked by the IT. Mr. VG Siddharth committed suicide because of the Coffee Day debt situation. But L&T, in a hostile way, took over Mindtree, and now L&T Mindtree is one of the top 3-4 companies in the IT space. Sixth largest IT services company. Okay. So now Mr. Lambu from L&T is saying that AI is making the closure cycles longer, and it's a part of the deals, and IT is in trouble. And Mr. Nilekani also says a perfect storm for colliding trends is raging. So, IT sector, even though Mr. Nilekani's statement is a bit broader, he says companies need both AI foundries for innovation and AI factories for scaling. He said now the IT sectors, the bellwether sector, the recruitment juggernaut in India, might decouple from headcount to the revenue, to the industry growth is considered. In other words, in simple words, what they're saying is that Indian IT might not be able to hire so many people, which is exactly what we talked about, right? We talked about. So a lot of people said that AI will lead to new jobs and so on and so forth. And we said that is BS. That is intellectual dishonesty. Because sure, AI might just lead to new jobs, but the number of jobs it's going to replace, or let's say make redundant, that particular number will be too high to replace. The number of new jobs coming in would be slower. So NPCI, the National Payment Corporation of India, has shown a profit increase of 42%. So even though it's a non-profit company, revenue surplus is considered profit in a non-profit company. And NPCI basically earns money through charging banks for transaction processing. So that's happening. And if you remember, a lot of payment aggregators were seriously asking for laxing for MDR rates. So MDR is merchant discount rates as far as transactions are considered. They said that we thought that we are building UPI and it's costly, and we have led to so much of growth in UPI transactions. It's a nation building exercise. There should be some MDR. We should be able to earn something. But government categorically refused. They said UPI is free and it's supposed to be. You won't get any MDR for UPI. So no money making from UPI transaction processing but NPCI is earning. So that's a conundrum. Now these companies are saying, oh, NPCI is having profits, but we are not being able to do anything. Please give us an MDR. And sadly, what the government did was they used to incentivize earlier. So they used to give incentives for processing UPI payments. They took it away. RuPay and UPI. So these people were saying now we don't even get incentives, and there is no MDR, save us, but government said no. Speaking of nation building, a company which was responsible for a lot of nation building, JAL, we discussed it, Jayaprakash Associates Limited, the JP Group, is undergoing uh, bankruptcy resolution, and Adani and JSPL, Vedanta are in the fray. We discussed this, right? So the group has some 57,000 crore of debt, and it's now looking at these bidders to take over. So this 55,000 crore debt, it was taken over by the bad bank. So there is something called an asset reconstruction bank. So government formed an ARC, Asset Reconstruction Corporation, where National Asset Reconstruction Company, to basically take over these stressed assets. Because if you look at the financial markets, stressed assets are very difficult to deal with. So a company which has not paid its debt, it's a stressed asset. How do you value it? When does its recovery happen? When do people who've lent the money get paid back? So on and so forth. So the stressed assets are like uh, dollars to cents. So they say 20 cents on dollar, 30 cents on dollar. That refers to the recovery. So NARCL, National Asset Reconstruction Company, it acquired the entire debt of JAL for 12,000 crores. So they paid 12,000 crores, get them free, and now it is its job to get the money back. Speaking of Adani and JAL, do you know what's the connection between Adani and JAL? Can you guess what's the connection between Adani and JAL? No. So Adani and JAL, Adani could be JAL. So JAL was a great company. They did really well. They were doing nothing wrong. Yes, the 57,000 crore debt is looking bad now, but the company did nothing wrong. Okay, they did a lot of good work. Yamuna Expressway, the expressway, it's an impressive project. The cement company which they built was impressive. Everything they did essentially, it was nothing wrong. So they did a lot of good work as far as nation building is considered. Honestly, a lot of land acquisitions and everything was on point. However, JAL had the political patronage of Mayawati government. So Madam Mayawati was the political force behind JAL as far as their land acquisition is considered, let's say, or SOPs are considered, or quick approval of projects is considered. Because if you are building the nation, you need quick approvals, you need to go quickly. So JAL got, let's say, a favorable treatment from Madam Mayawati. And they took on loans, they built companies, they built a lot of JP Greens, and the entire Noida. JAL is to Noida what DLF is to Gurgaon. So they did whatever they could, but then the government changed. So Mayawati got out of UP and Akhilesh government came in. So you remember that time? So Akhilesh government, as soon as it came, it wasn't friends with JP. So every project that was on, it started facing clearance issues. It started facing delays. It started facing enquiries and so on and so on, which led to delay in projects, which led to delay in deliveries, which led to delay in the money coming in, which led to the loans going south. So Adani could have been JAL if BJP government had gone out in 2019. So right now you would have been looking at Adani the way you might be looking at JAL right now at this moment. So anyway, that was the background. 57,000 crore debt. It was 2024, it was admitted to the corporate insolvency resolution process, bankruptcy code. It's sad because Yamuna Expressway and a lot of projects which JP did were actually pretty impressive. They did really well. However, not everything is under control. It's not just politics, by the way. So JP, when it got loans, that was 2008-9 or something. Suddenly, the taper tantrum was also happening in 2023. So India's financial situation was also changing. in FY from FY 2008 to FY 2013, due to which everything happened in this time. Whatever happened, everything was changing. So the perfect storm of unfavorable politics and global financial conditions and the national financial situation led to JAL's fall, unfortunately. But you know. Anyway, moving forward, Tata Sons Singapore Airlines invested 9,500 crore in Air India in 2024-25, says the article. Now, this is not news. Everybody knows that Tata Sons, it acquired Air Vistara and partner Singapore Airlines. They all invested and 10,000 crores went in and it became a private company. But it is in the news right now. It's restating that particular investment. Why? Why do you think it's happening? Because there needs to be some positive buzz around the company, right? After all, a lot of business is optics, and if these optics so go so bad, where do these 10,000 crores go? Mr. Tushar Tiwari asks, and Mr. Chirag Patil also asks, so if BJP loses, Adani is in big trouble. As a company, what measures it can take to hedge? Oh, so I wrote an article about this, Mr. Patil. Mr. Tushar Tiwari asks, will Adani be too big to fail if BJP goes away? So no, the too big to fail concept doesn't really apply in India. However, Mr. Patil, I wrote an article about how Hindenburg saved Adani. So the reason why Jayaprakash Associates Limited got in trouble was because it had taken a lot of debt, right? It had taken a serious amount of debt, and while it was growing, while the prospects were improving, that debt was dangerous. It was dangerous. And that same debt was very dangerous for Adani too just 2 years ago. The Adani had a very bad debt to equity ratio. Adani was like looming in debt. The company, the flagship company, made not enough money to cover the $20 billion in debt it had. So Reliance was debt free. Tata had some debt. Adani had like incredible amount of debt. I'm forgetting the numbers. But Hindenburg came and it shorted Adani, and it led to all this media uproar about how Adani is in trouble, which led Adani to stop with its debt fueled acquisition, pay its earlier debts, fix the house, slow down on the growth for a while, and check everything if it's in order. So essentially, Hindenburg saved Adani by shorting it. And the second strike also couldn't. And of course, it wouldn't have been able to save Adani if the government wasn't favorable. But yeah, now Adani is not in trouble at all because it has a very nice debt to equity ratio. It's less than 3. Its companies are starting to make a lot of money. It's been able to service its debt. Some debts are getting prepayments and so on and so forth. So now Adani is safe. But JP wasn't lucky. Wasn't as lucky. You know, everything turned bad very quickly for JP, which led to such sad outcomes. So anyway, moving forward, I hope this explanation helped. India races ahead with highest per capita data consumption. So India has the highest. Indian 5G data consumption continued to outpace all global markets at per capita monthly usage of 32 GB. So Indians use the most amount of data. But why is this a surprise? Should it be a surprise? There's a twist here. Indians are consuming the most amount of data at a per capita level. Sure. But what's the cost of that data? India is also amongst the cheapest countries as far as data costs are considered. So India's data cost is $0.04. $0.04. That's 4 cents per unit, let's say per GB or something. And the US has $2.5 or something. 33 times. So the factor is of 33. So that's why you're looking at such huge amount of data consumption. And but still the companies don't make money, right? Mobile users spend up tad sequentially in fourth year. Spending on mobile services rises 1.1%. Interestingly, overall spending on data services went 1.2% quarter on quarter to 56,000 crore rupees. So Indians spent like 56,000 crore rupees in a quarter on data. And very interestingly, if you're looking at, uh, there's an interesting number here which I'm missing. So consumers spent 86% of their telecom spendings on data services and 13% on voice. So 86% on data services, 13% on voice. Basically, WhatsApp calling killed the voice calls, right? They killed them. And the telecom companies are right to cry about it. Net revenue in the telecom sector increased 18% year on year to 6,33,000 crore, driven by 6.2% in intercompany settlements. Telecom sector is a perpetual news making sector because it always has problems. It always has problems. Because we've discussed a lot about Vodafone, right? So JSW Steel has filed plea seeking BPSL order review. Why the telecom company increase charges frequently, asks Mr. Archit. So Mr. Archit, telecom companies have to raise prices because Indian data costs are the cheapest in the world. As I said, 4 cents versus $2.5. It's 33 times cheaper than the developed markets. Now you can say that India's per capita income, which is $2,500, is also 40 times less than US per capita income of $90,000. However, still, the companies need to make money. It's very, very difficult for them to make money. India is already a 2.5 telecom player, Airtel, Jio, and then Vodafone, which is barely surviving. So you can expect the data prices to rise, to keep rising for some time. So JSW has filed a plea. Viewers of Thinkers Frequency would remember we talked about how JSW and BPSL, Bhushan Power Steel, had the most interesting cases of all time. So JSW acquired Bhushan Power and Steel from the insolvency bankruptcy play. It paid all the money. It took all the loan. It paid lenders. Banks took money. Everybody. This happened in 2019 or 21 or something. 19 or 21. Let's say 21. It happened in 21 if I remember correctly. Right? So, so on May, in this particular May, the May which just passed us, 2nd May, Supreme Court said that 2021 acquisition of BPSL, Bhushan Power and Steel, was illegal. So Supreme Court essentially said that return all the money, just return Bhushan Power and Steel to the lenders, to the committee of creditors. The banks need to refund you and you need to refund banks. Now JSW said, sir, that's not possible because we invested a lot of money in Bhushan Power and Steel. So how do you expect us to get that money? Sure, we bought that company from the bankruptcy code, but we just didn't buy it and start using it, right? It took a lot of money to run. How do we deal with that? So the Supreme Court says, oh, okay. So in May 26 order, Supreme Court said that let's go with status quo, and then interim order for status quo offered some relief, which had warned that liquidation would be fatal to the company. Mr. Khushwaha, Krish Khushwaha has a question. I have a question. Please go right ahead. Go right ahead. We're taking all questions. So moving on, let's go. Edelweiss Infra Fund is exiting from solar asset venture with Angie. Angie is a French company, and Edelweiss had invested some $500 million in it, and it had like 800 megawatts, and it was supposed to be a 2 gigawatt plant, but it's already exiting. So people are asking, why are you exiting so early? So Angie Edelweiss, this EIYP, that is Edelweiss Infra Fund, had acquired 74% stake in Angie in 2021 for $550 million. All right. Now, there were solar assets of 813 megawatts, and there was this pipeline was to be developed, an Angie pipeline, which 2 gigawatts watts of capacity. Now they are exiting the joint venture before this pipeline is even complete, and everybody's like, "Whoa, why are you doing that?" So it's basically, it reflects something must be wrong with the investment ecosystem, or something could be wrong with the Edelweiss Infra Fund. Maybe they are in a hurry to cash out because they have some other bills to pay, or maybe it reflects something about the sentiment as far as the energy investment ecosystem is considered. Increasing number of renewable energy projects are seeking buyers, although investor interest is weaker now than it was when some major deals took place. So that's that. If I have a BTech CSE student, can you help me for career guidance? Oh, sure, absolutely. I could do that, but not right now. So, ignored BSNL. BSNL. People are making sad faces on Archit. Mr. Archit is making a sad face on YouTube. That's true. BSNL is a dead horse, right? And even Idea, in my opinion, is a dead horse. You know why they really wanted to save Idea? Why? Mr. Bharti, Sunil Mittal, Mr. Mittal wanted Idea to get saved because Indus Towers was an Airtel company of which Vodafone India was a client. Now Vodafone Idea was a client of Indus Towers and it owed them 2000 crores or something. So, and a lot of money in more tower expenses or whatever. So if Vodafone Idea would have gone down, Mr. Bharti's Indus Towers would have also gone down, and he didn't want it. So he said we should desperately save Idea. India should not become a two telecom operator, and so on and so forth. Which is actually true. India should not become a two telecom operator, but I don't think Vodafone Idea is cut for the job. Anyway, moving forward, PLI schemes attract 1.76 lakh crore in investments, create 1.2 million jobs. So, Mr. Piyush Goyal said that India's 14 production linked incentive schemes attracted 1.8 lakh crores almost in investments and generated 16.6 lakh crores in production, besides creating 12 lakh jobs. So, they are very proud of the PLI schemes, and they should be. They should be. The electric vehicle manufacturing, why could it grow? Because of PLI. The smartphone manufacturing, why could it grow? Because of PLI. A lot of solar, a lot of plants, why could they grow? Because of PLI. So there's a lot of good work which has been done because of PLI, and they should be proud of it. Just 1 second, folks. Just 1 second, folks. Yeah, I'm back. Sorry about that. So, FASTag may help pay insurance and charge EVs. So, India is trying to go deeper into the FASTag ecosystem. So, currently, FASTag is just for toll payments, but the Road Ministry and Indian Highways and Management Company are looking at FASTag system to go deeper into insurance payments and even charging their EVs. So you can just charge your FASTag and it would be good to go as far as EV charging is considered, which is a great move, which is absolutely wonderful. It's wonderful on two levels. It's going to help the customers, of course, because charging ecosystem system could use a unified payment access. It's going to be good for companies. Let's say you make a charging station. You might like to be under the FASTag umbrella, and then it's good for the government in the best case, NHAI and everybody involved, because it's going to lead to some fundraising for those people. So that's interesting. That's a good item, right? Good move. For JSW, the point of court is also important and valid. It is making them example that you have to follow the law. We didn't discuss on why court said the takeover is illegal. So that is a very good question, Mr. Patil. That is a good question. But I read it, so it would be very difficult for me to actually quote why Supreme Court called it illegal. It said that, now again, it's the language is very peculiar. So they said that whatever you submitted as far as the resolution plan was considered hid a lot of very critical information. So you didn't disclose a lot of details as far as your resolution plan is considered, which is basically you took the resolution plan for a ride, and you basically got it. So there were some aspects to it which I am missing right now, but that's a good question, and perhaps I could take it tomorrow, right? Precast concrete use highways gets a push. So a lot of work going on as far as this highway construction is considered. Precast concrete speeds up the construction essentially. So a precast concrete element in built up areas and urban municipal has several benefits such as reduced pollution, minimizing user time delay, and so on and so forth. So that's that. And thank you, Mr. Patil. I remember this. I remember the deep session that we did 20 days ago, where I talked about why Supreme Court said that it was illegal, but I am forgetting that detail right now. So, speaking of details, an interesting detail is that steel companies are asking some relaxing as far as the clean energy rules are considered. So you know that steel industry has been mandated by the government and by the bodies to actually follow a lot of clean energy requirements. So a lot of those clean energy requirements state that you have to have some sort of renewable energy component. You cannot be using power from the grid to be making steel. And then there's something interesting called waste heat reusal. So I'll just be proper with the waste heat recovery. So a lot of heat is generated while they are making steel, right? And when they are making steel, that waste heat is used by steel companies to actually generate electricity, and that electricity is used for consumption and so on and so forth. So these bodies do not want to count waste heat regeneration, or let's say electricity generated through that waste heat process, but steel companies say that please count it, because it is a very good way of generating electricity. Otherwise we won't be having an incentive to trap this waste heat and use it for electricity. We just let it go, and if we let it go, then there's going to be a lot of pollution. And if you count this waste heat as far as the whole scheme is considered, as far as our total intake of energy is considered, you will we won't have to buy so much of extra renewable energy. So these people are mandated to buy renewable energy, but that mandate could be relaxed a little, was what these companies are asking for. Steel producers are mandated to meet 33% of their total captive electricity consumption for renewable sources, okay, up from 29%. Now this is calculated by something called renewable consumption obligation, okay. Now RCO, renewable consumption obligation, is calculated based the total captive electricity generated and self-consumed and excluding waste heat regeneration. So total captive electricity generated and self-consumed excluding waste heat regeneration. What these people are saying is waste heat regeneration reduces fossil fuel intake, so you should count it. So that's a good argument, I guess. What do you think about it? Are steel companies right in asking that waste heat regeneration should be counted and should be used to offset the requirement of renewable? So it should be counted as a renewable source of energy, essentially, is what they're saying. Do you agree with that? I think I do. I think it's a fair ask. You can let me know in comments, right? Anyway, Cabinet okays Jharia plan Pune Metro Phase 2. That's nice. Good for Pune, I guess. Moving on, Unilever's Magnum to acquire 61.9% in quality walls. So Mr. Tushar Tiwari says waste heat should be just their internal efficiency. I didn't get it, Mr. Tiwari. Waste heat should just be. Yes, I'm coincidentally in the same business. Oh, okay, Mr. Patil. Wow, interesting. So you know it. Uh, it's very efficient, correct? I didn't get what Mr. Tiwari said though, so if you could just clarify that would be nice. Anyway, moving forward, Unilever, Magnum has acquired 60% in quality wall, 61.9%. So Unilever bought a lot of ice cream companies. One of them was Ben and Jerry's, other was Magnum, and there was Waltz, and so on and so forth. So if you want to read a great book, one of the best books of the Indian, not sorry, from the global business standpoints and corporate social responsibility standpoints, there's a book called One Scoop at the Time. It's the biography of Ben and Jerry's. It's a beautiful book, absolutely wonderful book. Uh, you can read that. But the point is, Ben and Jerry's got acquired by quality by Unilever's Magnum. So Unilever used to have this ice cream business in the uh, company umbrella itself. Now it has demerged the ice cream business and it's called its Magnum. So Unilever's demerged ice cream business, Magnum Ice Cream Company, has agreed to buy 61.9% of Quality Wall India Limited from the parent firm, Unilever. So essentially, it's a demerger happening. Earlier, Unilever used to own Quality Walls. Now they demerged Magnum, and now Magnum is buying Quality Walls from Unilever. So some financial engineering, psychology and business books for beginners. I will talk about it, Mr. Archit. I'll talk about it. Psychology and business books for beginners. Are you what kind of books are you? If you're looking at a psychology book, you should read How to Fail at Almost Anything and Still Win Big. Not for beginners, it could be for anybody, but it is so good. It's such a beautiful book. It's such a well written book. It talks a lot about psychology, it talks a lot about business, it talks a lot about a lot of things. And it's something that somebody can read. It's just a wonderful book. How to Fail at Almost Anything and Still Win Big. And it's going to be immensely valuable and enriching. Immensely valuable and enriching. Moving forward, uh, yeah, so we've discussed this. Okay, that's also nice. So I just make sure that I don't miss any important information, so that we remain tight as far as the global happening is considered. Mr. Tushar Tiwari says wasted heat is just a process for the steel company to save cost from buying electricity off the grid. It's just cost savings for them. No, it's not cost savings. You have to uh, invest in equipment and in technology to use that wasted heat to make it into electricity. So they are actually doing the country and the world a lot of service if they are generating electricity through waste heat, because that would have been on the grid otherwise. Anyway, moving forward, Panasonic pulls plug on washing machines, refrigerators in India. So Panasonic has been going through a very difficult time worldwide, and even its India unit is looking at serious difficulties. They had just 0.8% of refrigerator market share and 1.8% in washing machines. So Panasonic is a very good company, a Japanese company, but they fell on hard times. Uh, it's just a very long story. Would be difficult to get on it because it's already 8:56, but they are pulling it out and they are just leaving the consumer electronics major to only TVs and air conditioners. So Panasonic still makes a lot of TVs and air conditioners. They're going to stick with that, and they're going to help the people to be laid off in a very gentle, manly behavior. That's quintessential Japanese way of work, right? Very nice. Tata Play loss widens to 529 crores in FY25. So we talked a lot about how the D2H game, the TV broadcasting game, is really, really going down the drain. Tata Play's loss again says it. Total income fell 5% year on year. Oh my god. Imagine your company going 5% down year on year. 50% down in like 15 years. Unbelievable. So, uh, and then the government gives you a 10,000 crore bill, which is a spectrum charge or some due of something. uh, the government will need to save the TV industry though. if the TV industry dies, a lot of things are gonna go wrong. A lot of things are gonna go wrong. Anyway, uh, Ferrari is venturing into making a racing yacht. That's nice. Anyway, moving forward. Not enough bang for the binge. Indian streamers flip the script. So now you must have noticed that Amazon Prime has started showing ads to people who subscribe to Amazon Prime. And if you want to get off ads, you need to pay extra, right? So that's what it's showing, that premium originals may drop 30% within a year. Streamers realized focusing solely on premium cost content doesn't boost profitability. And paid content subscribers dropped 1.6% to 150 million from 153 million. So very difficult play as far as the whole content paying ecosystem is considered. Now, speaking of this, if you remember, viewers of Thinkers Frequency would remember, I told you about how the VC action in the regional OTT players was a mistake. Do you remember? Do you remember I told you that a lot of VCs were investing heavily into these companies, these OTT platforms like Stage and some regional OTT players? And I told you that it's not going to be making money and it's going to be a very big down the drain kind of a situation 2 or 3 years down the line. And it's already started showing signs. So content subscriptions are going down and advertising doesn't pay a lot, right? India's CPM is very low, so you can't make enough money through ads as far as these players are considered. So just a week or two ago, we discussed how this micro drama plan, which is starting to see a lot of VC action all of a sudden, 5 million going into some company, it's all gonna go bust, is what I think. Anyway, India is still attractive for investors. FDI flows strong. MCX, which is multi-commodity, goes high. HDB's financial IPO subscribed very bad, 0.37x on day one. We talked about how HDB's IPO went bad. A lot of people had bought its pre-IPO shares and they saw a 40% decline because HDB and HDFC started showing some conflicts. Now it's gonna get fixed and their money's down the drain for some time. Unfortunate, but you win some, you lose some, I guess. I shouldn't have laughed. Should I? No. Sorry about that. I derive no pleasure in somebody else's money loss. It's just that going out of your way to buy a pre-IPO share of a company whose financials you don't understand is slightly weird. But anyway, moving forward. Just checking for comments if I'm missing anything. Okay. So, PSU bank share in CD issuance rises 69% from 6% in just 3 years. Public sector banks have stepped up the issue of certificate of deposits, leading to their market share zooming to 70%. That's huge. That's huge. I hope I'm not missing out anything. Yeah, RBI has extended trading time for call money and repo markets. That's something that's been done after 5 years. Last it was done was 2019. So there's going to be an extended timeline because there's a lot of different markets have started. There's a lot of involvement of different markets, and because of limited time window as far as Indian markets was considered, this was becoming a problem. So RBI was looking at this extension of timeline. Finally, it has happened. So 10 to 7 p.m., 10 to 3 p.m. and so on and so forth. A lot of timings. People who are very specific to this business would be appreciative of this detail. So I wouldn't share it with everybody, right? Driven by travel spend, remittances overseas under LRS increased 8%. Outward remittances under the liberalized remittance scheme rose 8% to $2.5 billion. So outward remittance is that Indians going out and then spending money abroad. So that is outward remittance, and because of the travel and rise of it, remittance has increased 8%. year on year, which is huge, right? Which is huge. So, moving forward, IFSCA unveils framework for ESG-linked bond issue by ungreen companies. International Finance Services Centers Authority has issued framework that will enable companies which are facing difficulties in reducing carbon emissions to raise funds through a gift city environment. Well, ESG, I feel it's a lot of scam. Anyway, ski Novo Nordisk, which is another semi-glutide company, uh, the developer of weight loss drug Wegovy, has got a Spanish probe going on for its weight loss ads. So they are falling out of flavor as far as Spain and Europe is considered. They are really thinking about this very deeply. So should we. But it's just an ad campaign tussle, nothing big. Speaking of tussles, NATO allies have agreed on a higher spending. So member countries to raise defense spending 5% of GDP. This should be a nod for India to raise its defense budget as well. Because NATO, the North Atlantic, Transatlantic Alliance, it was basically an alliance of US and Europe to counter the Russian invasion, or let's say Russian might, right? Now, NATO had the problem of only US spending all the money on everybody's behalf and Europe not footing in the bill. Now, Donald Trump came with the promise that either we just go out of NATO or the European countries pay their fair share, right? That was the big bone of contention as far as NATO is considered. Why is there a lag in the video? Audio. Sorry, sir, Mr. Menon. I don't know. There must be a problem with LinkedIn. I hope it doesn't happen. Anyway, so what I was saying was that US also always used to be paying almost all of NATO's expenses, right? And when the countries in the line of fire that were European countries, they didn't used to pay. Now it has come to agreement that members companies are raising the defense spending to 5% of GDP. Now India spends around 1.9 to 2% of GDP on defense. So let me just check Indian defense expense. India defense spend of GDP. 1.9%. I was 100% right. So when Europe and NATO are raising their defense spend and the world is raising its defense spend, maybe India's defense spend needs to go up as a percentage of GDP is considered. So this should be something. By the way, as the truce happened, defense stocks fell. Nobody should have been surprised. Nifty went up, but defense stocks got a beating. That was expected. Peace is not good for defense, right? So, but peace is good for other players, everybody else, right? EU wants China to fix rare earth issue before July summit. So EU is in a lot of trouble as far as this China rare earth scene is considered. And at first I had read this outline, this headline as EU wants China to fix the rare earth. But then I read it again, I said wants. EU can't want China. Nobody can want China. And with that, we have come to the end of the 32nd episode of Thinker's Frequency. I loved talking to everybody. I hope it was valuable. Thank you, Mr. Kumar, Mr. Tiwari, Mr. Archit, Mr. Patil, Mr. Menon, Mr. Khushwaha, Mr. Kulkarni, everybody. Great session. Loved it. Absolutely loved it. Oh, there are a lot of comments. Isn't that NATO hike to buy more weapons from US to revive their defense sector? Even if it buys weapons from US, it's a step up from just using the weapons of US. And no, sir, it's not just that. It's basically spending. It's footing in the bill. So whatever expenses right now, until now, US was like the major contributor of it. Almost all of it was US. And now it's going to be more balanced. Perfectly said. Best time to develop joint venture, increase spend for defense. Great job, says Mr. Elliot D'Souza. Thank you so much, everybody. Insights and analysis which don't lead to paralysis. Our 32nd episode comes to an end. The mental workout. I really love this framing of mental workout, reading difficult things, analyzing, trying to predict. It's great for us and it's great for me. So thank you for letting me do it. I'll see you tomorrow, same time, same place, hopefully. Bye bye. Have a beautiful day personally and professionally. Take care.